Right. Just turn a ding dong.
Imagine being able to
Oh,
build
God.
anything, for any reason, in any style,
Oh, no.
at any scale,
You think I'd
for any reason.
you think I'd learnt by now, wouldn't you? All right. Okay, let's get going. Boom, 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 boom. Who on earth is Newball? Right, okay, let's get going. Ding dong bells off in and out. Right. So ATR today on the FTSE is 11, DAX 57. What a difference a day makes, doesn't it? Absolutely. From a sea of all, this is the daily edge, from a sea of all red. Are we connecting at all yet on the stream settings, viewer activity, analytics? Nothing. Oh, right, okay. Well, whether I'm not sure it's streaming on YouTube or not, but let's get going. Yeah, all a sea of red yesterday and a sea of green today. I did say the market would recover and a bounce back. When everyone yesterday was giving it a chicken licking and the world's imploding and shorting the US 500, we went long and it went up 1.4% for the day. So fantastic if anyone did that in the afternoon. Um, and I don't know if he's on, but Mickey Long. There was lots of Mickey Longs that love to buy the S&P, and it's the darling of the market. Right, so what have we got today? Well, today I'm going to go over the on-balance volume, and I've talked to quite a few people in the trading room, as you know, and get Terry yesterday. The Not the on-balance volume, the orb strategy. So I've got it here, finally marked up, ready to publish. The opening range breakout will go over that, but it doesn't quite float my boat the way it was designed. So I'm called it the orb plus strategy. We overlay our tools onto it and take it from a 55 to 60% trade to 80% probability trade. We did it yesterday. We did it live. I showed the room how to do it on a 1 minute, 5 minute, 15, and 30. And I did say I'd mark it up and leave it, so I have. And we'll go through that today. But we will trade it live at 8:30 and I'll go over the strategy at 8:30 with you. So that should be quite exciting. Bum, 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 bum. So FTSE hit the targets, hit all the targets yesterday on the FTSE, which is really, really good. All the high targets, S&P 500 closed all the gaps, extreme gaps, including closing gaps as well. And gold, yeah, smashed out the ballpark, and the new guys. And Terry, you're welcome with the gold bots. Absolutely creamed it yesterday, so which was really, really good. Um, Crude, we had crude in our horizon yesterday, but I didn't put it on the report. But it's got to go on the report today after the Indian debacle. I'll leave it for you to read the Daily Edge. And we'll go over the Daily Edge report as well for July. Uh, Cable, well, we lost on cable. It's like, oh, heck, we actually lost the trade. Yeah, we did. We lost the trade yesterday on cable. But if we'd had the bots on the Dirty Dozen, then they ripped a new one in the market and give us some money back for cable, which was nice. So I actually have put out on YouTube today the results, and we will go over today the results of the daily edge. For the guys in the room, you'll have wondered why I've put this in. Uh, Invite channel. There we are, the daily edge. It's a report on blow by blow of exactly. Are we all listening to Jeanette now, eh?
Oh, I'm so sorry again. I'm so sorry.
Yeah, listening to the patients coming in. Right, okay. No problem. So the daily edge, we've got the daily edge here. Hit that and it will take you through, but I will go through the daily edge results as well here. But there is, posted it kind of late last night on YouTube if you want to see what's happened with the edge. And if you haven't got the edge, crazy if you I just don't understand why people don't have the edge or want the edge in the market. It has a hit rate of over 80% hit rate and delivered up to 18% returns. We'll go through the daily edge as well a little bit later. But at the moment, today's trading gold. I let's tell well, we've got 2 minutes left, so we'll come off that. We'll go on to on the FTSE, and we'll look at the FTSE. I've not looked at the FTSE for the gap. I've left all this data on. You can see here we closed the closing gaps yesterday, uh, no problem at all. And the market went up out of hours and unfortunately smashed our target a little bit late. Closing gap here. We are under Camarella breakout long. So what I'm wanting the market to do today is to break under C-ball. And we're looking for a break under C-ball. And we're looking to come all the way back down to the close today. Close today is at 91.28. And we're looking at hitting that. So how far away are we from here? We've got a long drop here under C-ball. I'm not interested if the market takes off straight away out of the trap. What I am interested in is a ATR of 30% ATR, which is 22 pips. And all we're doing is looking for a break under Camarilla breakout long. A breakaway to the 4-hour resistance up here. Not interested in following that. We know why this is. We've got there's some big news coming out on BP today. FTSE is driven has got BP is in the FTSE. So this just could be a big rah-rah overextension. The target I have for the day is 91.85. Market has opened. Looks like we're going to, because of it's driven by oil today, this. Oops, I've just deleted my target. Get rid of these other things. So we have a little conundrum here. We've got the news on BP finding new oil and new oil reserves, and it's going to go crazy with the price. Just going to have a look, see what happens. What's happened today out of the trap? BP, yeah, BP has shot up nearly 3% out of the trap. So a quick look. And this is one of the big drivers today when we're getting way off closing the gaps. BP, boom, yeah, there we are. Bugger. But that's trading. What you can't do, or what you shouldn't do, is follow the crowd, go ripping up, because all these big impulsive moves do get retraced. So you don't want to be sat on the wrong side of a retrace. Bit unfortunate for us to close the gap. We might have to wait a little bit to close the gap. And I'm just thinking, we're talking about, oil's about 11, 12% of the constituent size. market cap of the FTSE, but this is an impulsive move. Do we short this? Well, we are above Camarilla breakout long. You'll see in the reports, the daily edge that I mentioned, CBOS. Camarilla breakout long is an R4 Camarilla number. And when you are trading in cash markets on any indice, when you open above Camarilla breakout long, we're liable to break away, going to the top side. And likewise, when you see Camarilla breakout short, it's liable to if we open up below CBOS, Camarilla breakout short, we are liable to go. The market's liable to continue in the same direction and break away to the downside. So what we're looking for here, really, 1% risk. We're looking for a break under Camarilla breakout long, really. I think 9158.5 will give us the spread plus 1 pip in case we get a double tap reversal going to the top side. We can put a trade in there. I'm just going to write this down, record it. Yes, yesterday's out of the trap, we made 1.15%. So we're doing the FTSE gap again, and I'm just going to write this in one. I keep all the stats, although it is recorded every day. I don't really go back on all the recordings because I write them all down in my book. Very important to log your trades and understand what happened. And the note I will put on here will be about BP caused the spike, lifting the market momentarily before, hopefully, it drops back down. So we're looking for 1.3% on this, if and care for the market to drop. Right. Yeah. Let's wait here. I say we'll do the. Shall we have a look? These are the closing. Let's get this on 15 minutes. We'll go over this yesterday. We'll go over yesterday's additional trades that were 1 minute, 5 minute, 15 minute, and half an hour, all based around the
alert trigger.
The orb. This is the orb plus. And again, it's and then this is a 5 minute orb plus on 5 minutes. And then these are 15 minute and 30 minute as kind of described by the people who developed this back in the 1970s and 60s, actually. But we'll go over how all those trades worked in a minute. What we want to do is get this high test out of the way. What I should have done, in hindsight, it's always great, but we could bought some puts up at up there to get in short. But yeah, never mind. Never mind. Let's see what okay. Don't forget, guys, if you've got the gold bots, get your gold bot switched on. I did do just for your heads up. Where is the spreadsheets for bot tracker? Right, here we are. So bot tracker, I closed mine out early this morning, manual close on resistance. The Euro USD just wasn't really doing anything. Cable is still in. So we made 1.18% on that. So we're off the mark for the Dirty Dozen. Cable is still in the market. Cable is still in the market and keeps making money, then keeps not making money. So we're going to let that one run. So at the moment, we've got 2 bots in. We'll have a look at the filters, and yeah. So we're still on for over 200% return for the year using the Dirty Dozen bots. They have been performing pretty, on average, returning about 17% per month. Just for the guys on the Dirty Dozen, just to let you know. I've got 1 bot in at the moment running on here. We don't track the gold bots, we just use those as tools. They absolutely muller the market. We should actually track them now, I suppose. But we know they just work all the time. And I think we were doing the tests. What was it returning to? It was returning something crazy, wasn't it, for this month? I forget the numbers now, but it doesn't really matter. They're just bots. Right. Indecision. What's this market going to do? Is it going to run up just on the back of oil? It might be crazy if it did. Let's just do some tech on this. So before we go into pivots, what was closed, what was not, and how we obviously traded the gap, and then we did this trade as well, which is really, really nice. I'll put some alerts on here, I think. I'll put some alerts on camera breakout long. So if the market comes back down, we're interested. I am not interested in chasing the market. Good way to lose your money. I'll wait for this market to settle off. And there's no point in trying to short it up here, really. You could short it. We're going against the trend. You could short it on 0.5%, but a bit of a gamble, really, that it's not good. The gamble would be it's not going to break 91.90 for the day. But the momentum certainly is behind the FTSE at the moment, although it's the poor man's index, really. When you look, all the indices blew over 1%, some nearly 2% yesterday, and the FTSE just put in 0.65. Great defensive stock, but great defensive index. Let's get moving on. Let's go and have a look at gold, because that's on the edge. In the Wells, morning all, morning Steve. Can you put the daily ATR in the daily edge? As this would be really helpful, Stu. Not really, because the daily ATR is different for every single one. It takes an hour and a half to do it. And to put the ATR in, I put the ATR in, depends what ATR you're after, Stu, because you can use an ATR for 5 minutes, an ATR for an hour, an ATR for 4 hours. It all depends what strategy you're actually going to use, which changes the ATR. So this is the ATR. You can see I've got an ATR of 1.8 here, but then if I change it to an hour, it goes to 6. If I change it to 4 hours, it goes to 10. So I think if you're still using, I'll just say hello to everyone. I should say hello. I'm sorry. Hello all. It's not me being pedantic, Stu. It is just we use ATR on a 5-day range, and we'll talk about ATR as well, actually, when we talk about the opening range breakout. The orb plus, it's not the orb, it's the orb plus, because we're not going to trade
Alert
or
trigger.
release the orb in the way it was designed. We're going to enhance it from a kind of 55-60% chance to an 80% chance trade, because of the tech.
Alert triggered.
We've got. We're able to do it.
Alert triggered.
Hiya, Pep. How you doing, man? Let's go back.
Alert triggered.
That must be FTSE. So you can put the ATR on quite easily on your machine on TradingView. You can do that on PRT. You can do it on just about any platform, really. Quite easy to do. So what we're looking for here, we're looking for a direct break of Camarilla breakout long, and we're putting a double ATR, a 30% ATR stop
Alert triggered.
on this. I'm going to get rid of that alert now. We've got a trigger for oil coming down as well. So we need to go and have a look at oil. We're already in the FTSE. We're not already in oil. So we need to go and have a look at how we're going to get ourselves into oil. So we've had a slight slippage here, more than a slight slippage, 0.6 of a pip. That's a huge slip. $158.5 I had in here, and it's now 157.9. That's ridiculous. So well done, IG. Get quite a lot of slips lately on IG. So we'll have to have a look at how it's looking when the market comes down here. We're looking for a 1.36% trade. Let's go back and have a look at crude, because we are trading live for crude to make some rupees today. Let's go and get crude up and have a look. Right. For those who've got the daily edge, I hope you're finding it very useful. We will go over the daily edge and its performance. And we'll do it quite quickly here because nobody wants to go through all the stats. I can just run through a few tables. But if you want to go through all the bits, the reports on YouTube, have a little look, have a comment. You can get the report off there if you don't already have the report. Personally, I think you need your head read with a chance of getting it right over 80% of the time and a double figure opportunity per month just by taking a little bit of guidance of real-time data. It's got to be a good thing. So we've broken down this level here. You can see we've got structural breakdown of previous double tap here onto the 15-minute. This 15-minute bar is a lovely 15-minute bar. If you are trading and looking, right, let's measure this up because we need to do this break straight away. So we've got 50 pips there, spreads 3, and we'll add 1. So we'll round that up to 51. So that's 55 pips stop. If we go for a 1-to-1, it'll be a 55. Oops, not 55 pip target. So if you're using V12, you can do the calculations yourself automatically. If you're using V11, then you need a spreadsheet to very quickly understand what your one-to-one risk-reward ratio is. So we're looking at a break. When I get that random at 30, I want to be in at, right, I want to be in at 35. That doesn't give us, right. It's a bit of a conundrum here. It's 56 with that spread where I would like to get in. So 56 and 56. And then we're going to have to put some alerts here, I think. We want to be in at 37. Want to have a quick check of this bottom. The low is 38. We want to be half the spread roughly. So it's 38.1 with 37. 1.1 should be 1.5 really, but I do like my round numbers. We're looking for $65 a barrel on this. I think what we will do here, we'll have this set. So I'll just talk about this for one moment. So I've got a disappearing pen, which is good. So what we're looking for here, we're looking for all time frames. If you've got the 15-minute guide, then of course use your 15-minute guide. This is rather than 415 reversal, explain the 15-minute guide entry from 4 hours to 1 hour to 15 minutes. This market's got to be coming down, and it is. We're trading well and truly below that. You are also trading under the 9 EMA. You have a flat top 15-minute bar. It doesn't really get any better than that for an entry. So that's a great entry bar there. The issue you've got is here. We've got some resistance in here, which is a bit of a pain in the ass, around at the 6,500 level. So we do need to be careful when approaching this level here. But what we can do is we'll put an alert there, and I'll show you how to tackle this using a 5-minute chart to maximize profits and hopefully to get through the 65 and below. I have much bigger targets than this. Let's get rid of some of this writing, just get rid of the setup just for the moment. You can see the market, our targets are, well, let's have a quick check what our targets are. Our targets are well within the realm of the larger stops that have happened in the past, which have been all the way down at 64.85, 64, 65s, and even lower. So we're looking for this market to maximize what's happening in the market as well, with a glut of oil and lack of demand, prices going down. We are just going to follow. We are overlaying a technical outlook on a fundamental position, and it doesn't get any better than that. The other nice thing here, an observation, is that 9 crossing the 200 EMA. A bit of a death cross that for the market. Going to the 1 hour, you can see the market. When was this? This was Friday, late Friday. The market came down, and what's the expression? Give it some. So we can do a little Fibonacci on this, an extension on a 1 hour, to see where the market could see what the Fibbo boys might be looking at. So we'll take the top of that Fibbo there, we'll take it to the top, and we'll look for 100% extension. And we're looking for the market to probably drive 64.32s will be pushed. We have a 78 Fibbo here, which is 64.80, which is just below our 64.81 that we want to go for. So kind of the Fibbo boys are probably on our side as well on pushing this down on its next phase wave. So we just have to wait and see what we get. Let's have a quick fly dark, see if I'll just save this and we'll see what the FTSE is doing. Greg, it was a great review of the Daily Edge. Cheers, Greg. You've seen it. So yeah, it's a bit of a well, for everyone that knows me, people in the room know me obviously very, very well, my private trading group. Which, by the way, if you want to join, I forgot about this, I'll be useless as a marketeer. We were at a summer sale, and we've got, there it is, 25% discount at the moment. If you want to come on board, give us a shout. If you want to walk around the room, I can take you around the room. Give me an email, give me a whistle, whatever it is, and I will give you a walk around the room. If we are a fit for you to come into the trading room, then there's a 25% discount there that you can get your pause on. That includes, of course, the Daily Edge and all the other AI tools that we use every single day. Right, what was I going to say? I've forgotten now because I'm waffling. So the market's moving off. I'm just gonna, you can just see we have a little bit of Asia Pacific market moving the market around here. You might get some of the Mickey Long equivalents. Is Mike in? I can't see who's there, but Mickey Long's usually in. He's not there. So anyway, we might see some buyers coming into here, but you know, the market should come off and close the gap. Let's have a quick flick at the other stuff because I want to explain what happened yesterday and go through what happened and why it happened, etc. Then we'll go through the daily edge stats and go and have a look at the video, but I'll just give you a spreadsheet on that, and then we can go through the opening range breakout. I've got the names of all the guys that said they wanted it last week. I was going to publish it last week, but publishing a guide that doesn't work, only works 55, 65%. It's kind of not my style. I've managed to get it up to over 80, and I've wrote a robot to prove it as well. So we can look at all that. Right, and now I've not done all this. You'll notice here all these EMA lines. So one of the things I do, I like to do, is I mark up all the different key EMAs, 200 EMA on the 1 hour and on the 4 hours. So I can actually see if the market is progressively moving up or not. So you can see here yesterday it was marked down here, and now it's a little bit higher. So we know momentum is gathering pace, and we took that trade yesterday. And if you remember, when everyone was shorting gold, I said, go long. There's always an opportunity for a hedge with what's happening with the tariff situation. Oh, I've got some interesting stats I've written down here about where we are so far with the indice trading. Actually, I'll read them out now because while we're doing it. Believe it or not, the best index to have bought and held onto on a yearly basis is the DAX, made 37% on a year-on-year. And it's the biggest yield this year, 19% this year to date. NASDAQ is only 10, with a peak of 28% for the full year. And you'd have expected that to be the highest because it's all tech-driven, but it isn't. Germany, the DAX, is the best index, has been for the year, and it is this year as well. S&P, which is always the cuddle index, the one that constantly, very slowly moves up and doesn't give anyone too much of a headache to trade going long. Up 7%, up just 7% this year, not a lot, and 20% for the year. The Dow only 4% this year. It's gone up. It's a bit wild one, the Dow, of course, and it's 13% year on year. And the FTSE yield so far this year is 12, only second behind the DAX, and its yield on year is 14. So European markets are a lot more robust and have been stronger than the American markets, and the stats prove that out. So there we go. Right, gold. So we've got 200 EMA down here. I'll tell you what we'll do. We'll just do the overlays and go over everything quickly. I'm just going to do the retraces and just have a little look at where the retraces might be. I don't think we'll see the 60 retrace this long. Now, people might say I've done the retrace at the wrong point. No, I haven't. This is the lowest point on the impulsive wave. The indecision bar here, these are 4-hour bars. So this point is the lowest point, not that point. It's this point here. Some people, oh bugger, I've done that wrong, haven't I? Put that back. What have I done here? That's just deleted 2 things at once. What's going on with Pro Real Time? Put that back. Delete the Fibonacci. All right, okay, not sure what went on there. So 4-hour EMA, will push that precisely there. 1 hour. So we've got the, you can see where the 4 hour is. Look at this, you can see the 1 hour is just about the same on the nose. So we've got that, very important technical support, all saying the same thing. Right. What are we looking for? Can we draw any other technicals on here? Well, we've got a bit of support there, which has already been broken. We've got the market rising up on the higher highs going through here. So there is kind of something there you can sort of hang your hats on. Into the lower detail, all we're looking for really is, if I pull this out, all I'm looking for really today is, this was a stretch target yesterday. We had a 1-to-1 impulsive move. The market did over 1% risk to well over 2% on the market. I'm just going to check that my gold bots are switched on. Gold is switched on, yes. So that's good. Right, okay. So what I'm looking for, if you go back, markets always repeat themselves. So it's kind of interesting to always go back to have a look at where your future targets might actually be. What was setting up to be a nice head and shoulders just got destroyed and turned into a M for murder pattern. And you can see here, what's this? This is my smart pen. I forgot what the smart pen does now. All right, yeah. Yeah, so at the M for murder pattern here, which was a breakdown here for the market to come down to a target down here or just a little bit lower. And that worked out quite nicely. But to get back to the point, here was an obvious target yesterday for the market to come up and touch into, which you expect the market then to reverse off this and then come down. That's an expectation. Once this area has been touched and broken, then it opens up to the next area here where we have some resistance here. And if you look into the detail, the market broke through, provided some resistance, come down to some support here, which was then recognized here. And, well, the market is going to, why have I got this red line here? It's what I call, this is what I call soft tissue. Get rid of the rectangle here. Markets are likely to come up to here. But the thing that surrounds us here is something which is quite a phenomenon on gold called the BRNs, big round numbers. Markets often bounce off BRNs. So we want to front run the next big target with a front run of a big round number. So let's get rid of all this, clear my drawings, clear that. Let's go to where we are today. So market's really buoyant. The market is bullish all the way down to 1 hour and all the way down to 15 minutes. Here's a 15-minute bar, and I want to trade this one. So trade this quite quickly. Now that is a 15-minute bar. We've got a 9.1, round that to 9.5. We can have that rounded to 10 pips. 10 and a 10 would be a nice, easy one to trade. I am going to trade this at 2% because I always trade this at 2%. I don't recommend anybody else doing that. Generally, 1% is the order of the day. And what we're going for is a break of this Icanashi candle. It's a lovely Icanashi candle. I'll put the trade on while I'm talking. We're 75 is the order of the day there. We're looking for that break up there. Stop under the swing low. Stop under the swing low. Low is 65.7. The spread is 0.3 plus 0.3 gives us that extra 0.1 wiggle room. So a 10-10 would be quite nice. We're managing to get a 10-10 in within where the market has already been here. So that is quite a nice setup. One thing we've got here, we had the market positive, bullish from daily all the way down to 15 minutes. But until the market opened at 8 o'clock, we were kind of moving from a bearish price momentum, and now we've turned to a bullish price momentum with the EMAs, the normal momentum. So when we've got price action running the same as the moving averages, it's a pretty good setup. So we're in gold on that one as well. Also, so we'll look at in a gold at 3,375, and we're going for a 1-to-1 in my case for 2% on that one. I think what we'll do is I'll put an alert up into here as we get this resistance, because as we get up to here, we should be putting our stop to entry into the market, and we should be seeing the bot starting to have a look at this and kick in. Right. So where have we? Let's open up. I said to you, let's look at the other forex that we've got. Forget this is a bot running. What we're looking for here is a break of 13.65 here. Oh yeah, sorry. Simon pointed out this morning, I forgot to press the button in the daily edge here. I posted it in the daily edge, and then didn't press the button. It was sat here. So apologies for that, guys. Thanks, Simon. Otherwise, I would have never known. Everyone would have sat quietly thinking, where's that flipping edge? But there we go. So we are just looking for a break here. So that's going short. And we're looking for crude to give us a payday here. So we're in crude as well. So we're in 3 trades now. We don't need to be in anymore. The idea here is try and make a 1% a day if we can, which would be absolutely fantastic. 3%, 2% a week would be fantastic. 161% a year. But you know, making money is what we're here for. But the first thing, really, to be fair, is we're learning how not to lose money, and that's the key thing. Manage our risk. Right, I'm going to get these stats up now for this edge. Where are they? I don't want to play anything out live here. Don't be sitting waiting for a few minutes watching a flipping presentation. That's not what you want to do. I think I've just got a spreadsheet here, and what's that? So that is kind of a précis of where we are. Can I? Will this let me highlight? I think it might actually, mightn't it? Can I draw on here? We'll soon see. Yeah, we might be able to. So these are all the days here that we trading days. You'll notice here that I've put 18%. That's predicated on every day actually making 1% in the market, when in fact we make a little bit more than 1% when we trade. So if you look here, we've got, that's not working very good, is it? Can I blow this up so I don't have to hide? I can just use my mouse. Let's just clear all my drawings and let's zoom this up a bit. Right, so here we are. These are all the trades. So when we got a success for the day, we traded and we had 5 trades for that day. 4 out of 5 hit, which is, we always risk 1%, 1 for 1. So on that particular day, we obviously, this isn't all our trades that we do in the live room, but this is just what I put out on the Daily Edge, and people outside of my live room get to see all this. And if you're a subscriber to the Daily Edge, you see this every day. This is just looking back. So 4 out of 5, not bad, a lot more than 1%. 3 out of 4. Then you get a mixed day. You get two trades that hit, 2 trades that fail. You risk 1%. So it's a flat day. So we call that a mixed day. All 4 trades hit the targets. So you could say it was a 4% day, but we'll just count it as 1. We just call it as a successful day. Then we've got 2 trades closed out successfully. And then we've got 3 trades that stopped out. So on balance, that's a 1% loss. So that's our losing day. And as you go down, you can see all the different trades that we have. And every single one of those is documented. So winning days, 82% of the time. Mixed days where we go flat and don't make any money at all. And then the days when the market, unfortunately, went against me and we lost. So based on 1%, you would have made 1% wins every day. You made 18%. So that is the Daily Edge in one page. Obviously, there's a lot more to that. But have a look at the presentation. Well, it's not presentation. It's me talking through what we've done and the trades that we've done. So, give us a bit of support. Have a look on YouTube. Write some comments. Give it a bit of support. That would be really, really nice. I'd like to try and get the Daily Edge out. It's only a tenner. It's not going to set the world alight for me. But what I would like to do is try and help as many people as we can. And even if you just have a crack at it for 1 month. And actually, 1 or 2 people have had it for a month and decided it's not for them. Probably don't like to be guided to success. I don't know. All sorts of reasons why people use it. But if there's anyone here that's got reads the Daily Edge, your comments would be interesting. I know Stu's already had it. He said about the ATR, but really difficult because is it a 5? When you do a general guidance on where to trade, people are going to use in 1 minute strategies, 5 minute, 15 minute, 1 hour, 4 hour. Each one of those time frames has a different average true range. So you cannot put an average true range in. You'd have to actually specify exactly, excuse me, what time frame you're quoting the ATR at. Right. Flipping heck, I've been talking and we've missed the guys, you're not reminding me. Right. We are looking to do the orb. So I'll quickly set the orb up now. The range. So we've got obviously 8 to 26 is the lowest point, and the highest point is going to be, where's 8 o'clock? 8 o'clock, 8 o'clock. It's going to be a very, very skewed orb today for the simple reason 59, which, so there's the high. Wow, that's crazy. So it's not going to be brilliant today. So this is the opening range for the first 30 minutes. So what we're looking at here is, looking at the range, where the market's closing. So from 8 o'clock to 8:30, we're looking for the highest and lowest points in the market. So the highest point was here, lowest point was here. Ideally, when you trade in the opening range, you're going to want to be going with the trend. So a breakout of here, that's not likely to happen. The thing we have in our favor, if you will, is we do have a open gap to close. So the market makers are going to really want to try and close that gap today. We've had the rah-rah with BP and oil, all the good news, and then the market just fallen away. And as you can see here, I did say the Mickey Long results. Gregor, do you get the edge currently? I'm not sure whether you do, and I don't look at all the detail in there, to be honest. Anyway, so here we're looking for the market to actually break down. What I'm going to do is put an alert here. We've already got a gap trade down to the close, but we could do the ob trade as well. So while we're waiting for this, what I'm going to do, I'm going to go back and explain what happened yesterday. So let's go back. Yes, you see all these different things in there. So this is yesterday. So these are the extreme gap that was left in August, and the extreme gap and closing gap, and we hit those yesterday. So that was two more targets that were whacked, which were great. We can get rid of those now because they have been hit. Now, what we've got here is, I just need a few more units there, don't I? I'm running out of space. Right, so don't know if everyone can see that okay. This is the opening balance yesterday of the first 30 minutes. So forget the initial trade that we did that won. This is the initial balance yesterday. So what we did is live. We did set the initial balance trade on fractals. Then we set an initial balance trade using 5-minute Fibonacci breakouts. Then we set the trade using 15-minute, and then we set the trade using 30. So we've got all these different setups to actually trade. The trade that I would call, I'm going to put two variations on it, the ob plus, because it actually increases the probability of your trade winning. It makes sure you're in the market for the shortest possible time for your win. And it's, oh, sorry. Can't believe that was one of our traders actually calling me when they know we're live, but never mind. So we've got 1 minute, 5 minute, 15 minute, 30. And this is what I'll call the ob plus. So what we've got here is the range for the first 30 minutes. This would be the stop as defined that is recognized all over on the opening range breakout. Yeah, so your stop would be just at the midpoint on the range. So that's where your stop would be. So what I have and what we did yesterday is, because it's a breakout trade, it would kind of seem reasonable that we would use a breakout to do this. And this looks like it's actually I actually move this. Let me just have a look at where the entry and exit was. Look at history. market closed. $91.04. Is that trade? 90. Oh, it slipped. 91.04 and out at 91.16.1. So it was a slippage. It was 12 pips. So I'm just going to type that in. Why? I've been trying to titivate this up. So 91.04 was the entry. And that should be 91.16. Is that 91.16? No. And that one is. So 91.16 was the target. Or is that the manual trade? The way I'm looking is because we've done 4 trades. There was a 91.05 to 91.24 as well. So this one, so that is the fractal break. Why did I extend this? I'm just looking at where we are here. I'll show you what I'm looking at. That's off the other screen. So that is a trade that concluded 91.04 and 91.16. I'm just thinking, did I run it further? Let's have a look. 91.16. And the actually concluded at 10.08. Yeah. Right, okay. Obviously I was playing around with it and I've obviously pushed it. So this was the trade 1-to-1 that one, and I've obviously squeezed it, haven't I? I must have squeezed it all the way to here and then bugged out. Right, okay, yeah. I should have just done the 1-to-1, so never mind. So here's the 1-to-1, but it's like everything I do on trade. If I can squeeze it and try and get more money out of it, then generally I will. If we're live, we usually always go for a 1-to-1. But the 1-to-1 here. So what we do here is a fractal break. So I'll get rid of this. We know it won. I'll show you what you would do. Delete all Fibonacci. Right, okay. So we've got the balance here, the opening range balance. The interesting thing when these guys that Arthur Merrill did it in the 60s and it was updated by other people, said when they actually revised it all, they found out that the opening range breakout was best served on 1 hour. Well, that's an initial balance, not a opening range. Initial balance is a 1 hour range, and the opening range breakout is a 30. So they're modifying the 30-minute breakout to a 1 hour breakout, which is actually an initial balance trade rather than orb. But let's just call it the orb. I'm quite interested in making that 30-minute breakout work. We do the initial balance as well, but I'm really interested in making that orb work. I've seen all the videos of all the baseball caps the wrong way around, and everyone's saying the multimillionaires doing all this trading. I've wrote a robot and statistically can show that it works, so it doesn't work. But on the whole, if you can get everything working more than 50% of the time with a 1-to-1, then you've got a little ATM going there. So what I like to do, getting to the point, is this is the initial balance here. What I like to see is the initial balance, or what I've back tested that proven to work, is using the fractals that I've developed to actually trade. So what I'm looking for is the market to put in a fractal above the initial balance here, and then do the trade on that basis. In fact, I have this here. The trade that might be actually the direct trade that we did. So from here, that was 904. That makes sense, yes. So there's a 904 fractal break there, and the stop would have been just under that gap here. So that should be around about 116, 114, and it's stretched up a little bit. So let's get this correct. Just curious as to why. There we are. What does that say now? Yeah, slip 111. Yeah, okay.
Alert triggered.
116. So it's done that. So what we're looking for is so to get to the point, we're waiting for a fractal breakout above the initial balance, and then we put our stop under the fractal, and then we've gone for a 1-to-1 risk reward. And as you can see, that worked. We've got an alert triggered, and that's coming down to initial balance. And what we're going to do, we're going to go back. I'll go back to all this because we're going to go back to our trade, which is initial balance here. And we're going to look for a 1-minute fracker breaking under here. The second one that we did that won as well was a 5-minute breakout. Now the 5-minute breakout is an Aiki breakout, not a normal candle breakout, because I want to see the momentum. It's a pain in the ass that this is actually happening now, because I want to explain more. And Steve, what's the best indicator to tell me I'm in range and to stay away? I'm in range. Oh, that the market's going sideways. Right, okay. Well, that's a really, really good question, because that goes back to what Stuart was mentioning before, is because depending on what strategy you're using, if you're using 5 minutes, you can get 5-minute ranges, 15-minute ranges, 1-hour ranges, 4-hour and daily. So it would all depend.
Alert triggered.
Get rid of that alert.
Alert triggered.
It all depends on where you want to spot the range and to stay away. Now, you can also range trade if you find a range. So what you would want to do if you're using one, let's say an argument's sake, 1-to-1. So you've got a bottom here and then a top here. If this goes to another bottom and then another top here, then you're in a 1-minute range. What you want to be able to see to give you some direction for range trading, or you can either do a breakout of a range, which I would say you need a breakaway strategy. So you'd use a fractal when you're doing a breakaway strategy. You don't need to do none of this arduous tests, double tests, and retraces. You can use fractals quite eloquently to range trade. The key in all range trading is the 9 EMA at any time frame. If you are going to trade the bottom of the range and go up, what you want to see is a break, not a wick, but a clear break above the 9 EMA. And then you'd go along to the top of the last swing high or to the top of the range. And then when the market reverses back, you would then trade again down to the bottom of the range, watching for a potential breakout, which would be a fractal breakout. Um, is that is that is that what you meant? Is that what you meant? I'm not sure. I want to make sure we nail the question, get it right. I'm not sure what these little crumbs are with people. Oh, it's for the people online. Oh, well done, Stuart. You're my top fan today. Top follower in the people that are actually watching. Well, that comment went good, didn't it? 3 or 4 people just dropped off like a bullet. Right, what we're looking for is a fractal breakaway here. We're kind of 0.5% up at the moment, and we're trundling down a little bit here. So cable bots making money, FTSE's making a few rupees. Gold has now there's a bot entered on gold. I'll just have a very quick flick over. We'll go back to the orb in a sec. In 5 minutes, I'll put the strategy up and we'll go through the strategy. Just have a quick look. Was that a bot that's entered? Yes, the bot's entered. Has your bot entered, Terry, for instance?
No.
Oh, Terry,
I know.
Done.
What's going on? No, it's not come in. It's there. I've just checked it and it's live, so it'll be user error this end, I'm sure.
Oh, matey, what have you done?
Oh wow, we're okay. We're in it anyway.
Oh yeah, we're in it anyway. Yeah, it's just you
Yeah,
know,
I don't know.
we always like to smash the market.
Yeah, I did send you a message last night. I know you had a heavy day with me yesterday, but I had that error thing come up again, so I just want to make sure.
Yeah, that error is the IG
Yeah.
messing around with the spreads
Yeah.
as they quite often do.
Yeah, I know. I'm sure. I'm just, as usual. I'm just probably a little late to catch up. It'll be in a minute.
When did you switch the gold bot on?
Oh, early this morning. Just about when you said, just before.
Right.
Yeah.
And it's on the 5 minutes.
It is. Yeah, I'm just looking at it now. It says it's running. No errors. Nothing.
Right after this session, if you're free, I would like to have a look at that because it's not on your individual machine, it's on the servers. And I want to make sure that all the servers are aligned and working correctly because if mine's on, everyone's should be on.
Yeah. Okay. No worries.
All right. Okay.
Well, could we do it a little later than the direct end? Could we do 11 or something?
I've got I'm out at 11 o'clock until 11:45, so we could do it at lunchtime if you want.
Could we do that? Do you mind? You know what it's like in getting in the zone, doctors and all that. I have to visit.
That's where I'm going, actually.
Yeah, there you go.
And obviously, in and out the doctors quite a lot with parents and the like. So yeah, I'm on doctor duty again today. Right.
Okay.
So let's get back to bots are moving quite nicely. Hopefully, we'll make some more rupees on that. All right. Now stop. I won't digress too much. There are a few that have come up with the AI screeners. There's three opportunities. Fourth one just disappeared. To shut fourth one there, just to short the backside off the markets. But let's go back to the FTSE because we were dealing with the FTSE. Right, yes, mate. I'm struggling to know when I'm starting a trend or sideways where make losses. I'm using your icon sheet and then email it. Thank you very much. Yeah, it's a really, really good system. Hopefully Tuesdays are helping. people to clear a little bit of the fog. Everything we do is live. So I live and die on my sword live. Well, I do that every day anyway. Everything's quite interesting. We do these rooms. It's this on this occasion. It's been streamed on YouTube, but we've been doing this for what, 5-6 years now. Every single day trading, every single day recorded live, and yeah. So it is a struggle to know what to do, what to trade. And the thing I would say is I've probably got about a dozen different strategies for markets going long, markets going short, markets going sideways, market function trades, all sorts of different types of trades. But that's just a drop in the ocean. There are hundreds of trades that work really, really well. What you got to do really as a trader is to find those trades that fit your personality, the time that you have available every day or every other day or once a week, and make sure you learn those strategies inside out, upside down. All the strategies that you are going to adopt need to work better than one-to-one for a risk reward over 50% of the time. So if you can get something that works 51% of the time and you're doing a one-to-one, it's an ATM. All the strategies you're using here, I think the worst one works 70% of the time and the best one is 90-odd% hit rate. And this, or plus, it'll be 75 to 85% hit rate. So it will qualify for me introducing this with my twist on it, because the opening balance range breakout's not good enough for the room. It's good enough to make money, but it's not good enough for us to use because we have strategies that work much better than this. So why use them? I just want to demonstrate the orb here. The orb with my twist with a fracker on it takes it into, yes, that's okay. 75, 85, well, 87% of the time it works. So we just need, I'll very quickly run across these other things now. So I'm putting an alert. We're waiting for this to break out. We might not get it while we're live here. But let's just want to show you, yes, that's Fridays. That's Fridays. Where are we? So yeah, we've done the 1 minute fractal here, and that was a 1 minute fractal. So the other thing that I'm going to put in the strategy, and I'm happy to share that with people. Rowan, such indicator to help see when the price is oversold or over. Yes, Greg, Rowan News. Yeah, absolutely. Greg's absolutely spot on. Do you ever consider going against the 200 EMA? No, mean reversion shit. I don't know. You don't have to get technical and clever. Keep it simple, stupid. That's what you want, the KISS principle. Keep something very simple. If it works, rinse and repeat, just use it. Do not go against the 200 EMA. It's your gospel. Some things you've got to hold to be true. And that's a 200 EMA. That's a 900 EMA, 900, a 9 EMA, different time frames. Do not do any mean reversions and all that rubbish. You don't need them. They might work, but they're not as high a probability trades as the ones that you've seen at the moment. And Greg's absolutely spot on. The stotch. Get your RSI, crumple it up, throw it in a bin, old hat. Use a stotch. Speed it to the right speed for day traders. So for commodities, for indices, you want 1555. That's your stotch setting, not the standards. We've done this for so many years that we can work out which are the right ones for day traders. If you're going to do Forex, and 833 is your setting for the stochastic, and it's a really good support indicator to help you make a decision. It's not going to be the indicator where you press the button, but it's a great support indicator. You need reasons to trade, not just one. You build a little story to trade for your strategy. So the stocks might be with you, one reason to trade. The 200 EMAs might be with you, two reasons to trade. The EMA on the 9s supporting you, three reasons to trade. And then how am I going to trade? Am I going to use a candle breakout? Am I going to use a fractal breakout? Am I going to use support resistance? And then that's all deterministic trading. Stack the story, press the button. It's just like it's putting the crosshairs on things. It's like what they're saying on Top Gear. You line it up, get the shot, and you've got three that are everything that says yes, or even four. Doesn't get any better than that. Take the bloody shot. Press the button. You don't need any fancy. I can feel myself. I can only use close 9 EMA, not 1-1. I have too much emotional triggers. We all have them. It's always a battle. Trading is easy. The emotional control is not. There is something that I do every day, and I've got the document you can download for free if you want to have a look at it. Let's have a quick look. And before I go, I will go over the orb. Running out of time. I've got so much to say and not enough time to say it in. Because we're going to do it once a week on YouTube. So free resources. The key that stops every single person from doing what they need to do is getting in. There's not many downloads of this, and only one person's actually made a comment on it. The importance of emotional intelligence and emotional resilience and control. I can't overemphasize it enough. Control your emotions, you're going to control your trades. And this is how to support yourself. Oh, what's this? I thought I would download this as it's free, but I was shocked at how helpful the document was. It is an unbelievable document. It goes through routine setups in the morning, challenges to your mind, getting your mindset in the right place. And it's absolutely key to you as a trader. Go on the website, get it. It's nothing, costs nothing. It's there to help people. I only come on Tuesdays to help people. It's the whole game. And what I want people to actually see is what a real trading room looks like, not a recording. And if people can see what really happens and decisions you really have to take, rather than setups that are always going to work, people start believing in trading a bit more. Yeah, I hope the rant the rant helps. But there we go. And again, if you haven't got the daily edge, God, you need your head read. I take all the emotional tasks out of it by telling you exactly where the market's going to go, as an idea, based on 30 years of my experience, artificial intelligence gathering data from over 100 different sources throughout the world overnight, from Bloomberg, Reuters, Market Watch, and loads of other places. I then take all that information, all the fundamentals, all the geopolitical issues, everything, crunch it down into something that is palatable, find out which are the best correlated trades for the day. I then put the technical view on, 30 years of experience, to identify where the market's probably going to go. And it doesn't mean to say I'm going to get it right, but not done too bad for 30 years. And give you some insights to help people get more consistent. And we use this every day in my trading room, and I just thought if I nearly give it away, I just cover the admin, that £10 for a month. It's got to be an absolute no-brainer. And Okay, yeah, we've got quite a few people using it now, and we've got 90 odd 5-star reviews. It's all we get, loads of 5-star reviews, because it is bloody good. So if you haven't got it, go away and get it. Your rants are much appreciated. Yeah. And thank you very much. Right, so we're going to have a look here at the 5-minute bar. So you can, I won't go into them all. I'm going to get the orb out, the orb plus strategy out now. Turn this off quickly, donk, and these lines align with that bar there. So you can see that bar there, the bar here, that is a 5-minute bar. So what we're going to take, we're going to make sure when we're trading the breakout, I've done the 1-minute fracker. That is the number one preferred. The second one is the 5-minute bar breakout. And the 5-minute bar breakout, the things that we would like to align to. Now, one of the things we want to align to is we are trading above the 9 EMA tick. With things that we're aligning to are that we're trading under the 26. Statistics show over a longer term the 21 is best, but we use the 926, as we call it, as a crossover. So there's a 926 trade here for the guys in the room that tells you should be going long anywhere. But this bar here is a break and a close above. It is very important that the bar closes above the the orb line, top of the breakout. It's got to close above there. Once it's closed above there, it is trading above the 9 EMA tick, above the 26 tick. It is with the 200 EMAs for momentum. There's only one direction this market's going to break out to, and that's to the top side. But what we're going to do is we're going to put our stop under the middle of the orb range. So there's the bar, there's the break there. Stop goes under the middle of the orb. The market then broke out here and then hit full target here. This says 1610. What does history say? Oh, just to prove, we don't make anything up. Don't make anything up in the room. Everything is recorded. There it is. I said 1610. What is it? 16.9 it actually hit. 16.09 and hit the full target. So bingo. And then just very, very quickly, that's a 15-minute bar breakout, and then that's a 30-minute breakout. Both of them worked. My quick query to you is, why do you want to put yourself at risk all that time in the market? And anyway, it didn't close within cash time frame. So 1-minute fracker, 5-minute bar breakaway, they are not part of an orb strategy. They are now for here. Now, I'm going to quickly pull this up. Hi, Alice. I've not seen you for a while. Well, for a week. This is the orb strategy as I've written it. I'm going to top and tail it and turn it into what I want to say. I've done a lot of research on this because probably like yourself, I don't believe anything that I get told on YouTube. And I always use the initial balance. And quite interestingly, which is the hour, where is it? In conclusion, for professional implementation, the best thing is the 60-minute orb, which of course is not the orb. It's the initial balance. That's why I use initial balance. But I think I can make the orb work very good as well. So there we go. So don't believe all you hear on the baseball cap brigade on YouTube. I run all the bots. We're running out of time, so I run all the bots to prove last week. Go and have a look at the recording last week, and you'll be able to see all the wins and losses. But here we are. This is going to tell you what it's all about, who did what to whom and why. And there are still groups like the CME group here which is, you know, an online provider of data. They still publish the ranges every single day, but you don't need to if you've got a chart. So it's over 60 years old. And I won't read all this. The strategy was based on the 30-minute range, and then it got changed over the years. And now the deterministic view is you need the 30-minute orb is actually work best on 60 minutes, which is initial balance. And we trade initial balance nearly identically to this. So you can do a 30-minute trade and a 1-hour trade as well, both fairly high probability trades. So I went over this yesterday, last week, but you know, we've got all different tiers of performance. So really, optimal performance is indices, which is S&P, DAX, and the FTSE, and it says it requires a 1.3x of the average volume for a valid breakout. And what I'm going to do is change that into an ATR setting. So what we're looking at is an average true range actually blowing out. But this data has been taken really from my research. And the only reason you're going to get a 1.3x is because everyone's getting behind it, because you got the breakout. So volume is always going to go up. But there are ATR ranges that we use all the time. And if I put this in here, there is an ATR range for all those indices that we set every single day, because we do ATR trading. So for the FTSE, if we've got an ATR, standard ATR of 11, but as we get up to the initial balance or orb plus, we need a minimum of an 8, and we can pull our ATR signal up to see if we are actually trading at 11 or plus. So it's going to be, are we trading at an 11? Have we trained? Are we trading with an ATR of 11 over the first 30 minutes? If the answer is yes, then that is your other tick to go. And we can quickly have a look at that. Put that, I'm just trying to rush through this quickly, but the people who have emailed me, and I asked them to put it into the comments after the video has stopped. Hi, thanks. I cannot see chart on which chart we are. All right, have a look at the top right hand corner. It tells you exactly which chart it is, and in the top here, exactly which chart it is. So what we're looking at here is, for the first 30 minutes, are we looking at something bigger than a 11 pip range? Absolutely, hell yes. So what you can see for the first 30 minutes, are we actually making over a 1x? Yeah, we're making over a 2x on initial balance on the breakout. So these ranges here where it says 1.3x on average volume, then we know we're doing over average volume. So one thing I'm going to say is that we must have made, I think, probably a 30% ATR move. As the market moves 30% ATR in the first 30 minutes, if it has, it's likely to continue to do so. If it moves 74, then that's our 5-day ATR slam dunk trade. And yeah, anyway, we won't go into that one. So we have absolute best here is those elements to trade: S&P, DAX, and the FTSE. Commodities, crude oil and gold, which we trade every day anyway, we know that. And then we can get into specialized trading of the major FX. And we're going to link server time frames, Northern European and Northern American, to do that. I've put in here, it's 1 minute, 5 minute, maybe 15, but I'm going to scrub 15 because you do not need it, really. Do not need it. Research shows we've got 55 to 65%. based on what the orb is, I can increase that from 65 to 85 easily. So we've got spike ranges, 150 to 300. So we've got 38. So that's in excess of 200 on a 15% ATR. Trading schedules for all the indices, including, I'm going to include the NASDAQ in that because the NASDAQ operates very closely in its characteristic and the way it moves to the DAX. And I'm going to prove and test that. And I'll do a video on it as well. So it's quite in depth, and it's going to tell you how to enter long, how to enter short. The issue that you might have is it's going to talk about fractals. So if you don't have fractal indicators, you're going to have to make them up yourself, or you're going to have to get them off the website, because if you haven't got fractals, again, yeah, they just work. You need fractals. What else? Dynamic stop management. Well, I wouldn't call it dynamic stop management. It's my 15% ATR that we've been doing for donkey's years. So that's what we do. All this about taking profits 2x and everything, don't really need to do all that. All you need to do is win very, very regularly, 80%, 4 times a day, and jobs a carrot. You're in the money. So I do need to find, between all the mentoring sessions I'm doing and live sessions, I need to get this to a workable document that people can have. I will be doing a robot behind it. Now, the robot will only work on Pro Real Time. I'm not going to do it for TradingView. I'm not a fan of TradingView. How can you be a fan of TradingView when you've got Pro Real Time? So it's only going to be for trading, only going to be for Pro Real Time, and eventually it will be written in Python for other applications as well. So what I'm going to do is increasing the probability of success. If these things happen, it will reduce the probability of success. And the professional implementation, of course, is throw the orb in the bin and use initial balance. Be doing a video for this as well. But for people on YouTube, you can, if you write in the comments, not in here, but in the video afterwards, and your contact details, send me your contact details, you can have the strategy. The video will be for my trading group, of course, and the bots will be for my trading group as well, because they're part of my trading group. If you want to be part of my trading group, give me a shout and we can have a talk about that as well. Is there anything else that I've not covered? No, so the market's messing around this soft tissue level that I mentioned before here. You would see buyers here. We just got to wait for the market to give it up. You can see on balance volume, on balance, the market's flagging. Renko blocks say this market's going to come off. At the moment, price action's above the 9 EMA, so the force is with you, going to the top side. Momentum's with you, going to the top side. We do have a market function in efficiency in that we have a closing gap here and a daily high here. So daily high is extreme gap and the close is a closing gap. And we just want to wait for that to play through, really. We're in gold. And we're in oil, and we're just waiting for things to come off. Any questions before I go on over and out of time and people are all, most of the people in my room have all buggered off as well. Because we normally only trade between, I give a heads up at about 10 to 8 of what's going to happen in the market. Then we trade, and we generally trade for an hour, hour and a quarter every day. That's all you need. So we have run over a little bit longer here. And I'll tell you what, if there's any questions that you've got, any burning questions, once this video is posted, because it's running live at the moment, put your questions in the comments and I'll answer all the questions, no problem whatsoever. And if you want to give me some support, if you're not already subscribed, then that would be great. And then put some comments and supportive words. That would be good as well. It encourages me to do this every Tuesday live. And yeah, that'd be good. So I'll bid you all goodbye and thanks for coming. Bye, and thanks for coming. And if you don't get the edge, you're banned. You don't go. If you haven't got the edge now, I don't know what else we can do to get people to get help. I don't know. There is a saying, of course, some people are beyond help, and we'll just see. But price of a cup of coffee a week with an 80% strike rate, not really much of a decision to make. Go and have a look at the video on YouTube anyway, and see what you think. All right, bye guys. I'm off. Bye bye.